As soon as this one thing happens, the crypto markets are going to rip towards the upside much faster than you can ever imagine. And according to this chart, this one thing isn't far away from happening. And this is the reason that right now, despite the fact that the news is full of fear and worry about Donald Trump and tariff news, the crypto markets today are starting to push higher. Bitcoin and the altcoins are up. What on earth is going on? Well, it's because the underlying economy is much stronger than the media is letting on. And I'm going to prove it to you in this video by showing you a few key charts. So if you want to understand exactly why the prices of crypto are going up and why they can continue to go up in the short term while the news and fear is hanging over the markets, then hit the like button and let's get into today's video. Now guys, before we jump across and check out this chart and understand why this is now making me think that we're going to see an interest rate cut much sooner than many people are telling us, which will be a catalyst for one of the biggest growth periods in crypto's history, I want to check out the Bitcoin price. Because right now, the Bitcoin price is sat at $82,600, which you're thinking, yeah, is nothing that impressive because it's still much lower than it was just a few months ago. Well, it's pretty impressive if you go and check out the fact that today, China has just raised tariffs on US goods to 125%. And we know that Donald Trump is going to come out with some massive retaliation number on this. So why on earth is Bitcoin now looking like breaking out of this key descending wedge pattern, which would send it to much higher prices and bring a lot of the altcoins with it? Well, because if you've been paying attention to the media and news over the last few weeks, you probably started to realize that it's mostly just BS. That probably became apparent to you when Donald Trump just a few days ago decided to tell everyone that he was going to impose enormous tariffs on the world, only on Monday to then make a tweet telling everyone it was a good time to buy in the markets, and then 3 hours later say that he was delaying these tariffs by about 90 days. This then led to major Wall Street banks like Goldman Sachs flip-flopping from ultra bearish to maybe a little bit bearish, saying that we're going to have a recession to say now that we're not really going to have a recession at all. But this is really all just noise and hype and media, because under all of this, Goldman Sachs would have known full well that the economy was much stronger than everyone was letting on. How do we know this? Because it's all shown in various key charts. Now, if you've been subscribed to my channel over the last few weeks with the notification bell turned on, make sure you are, then you would have understood that we were likely going to see a bounce around here because of the global M2 money supply, which has been inextricably linked to the Bitcoin price. Every time we've seen that money supply surging towards the upside with a 70 to 75 day delay, we have then seen Bitcoin price increasing within a 1 to 3 week time period. Right now, we are on that exact time period, and now we are seeing Bitcoin heading higher. But you probably have also realized that I am no macroeconomic expert. While I can go and look and research and understand what other people are talking about, it's not really my forte. My forte aligns much better with finding altcoins which are demonstrating various different strengths by understanding what's going on behind the scenes, talking to the teams, getting in deep involved with various different narratives and things like that. So make sure you're subscribed if you want to find out more about which altcoins to be buying and holding throughout this bull market for maximum gains. So I obviously had to go out there and find some useful information. I came across this channel, which is a newer channel out there in crypto, and I watched this video, which is probably one of the most informative, most useful and interesting deep dives into macroeconomics and what happened on Monday with the markets dipping towards the downside that you could ever have imagined. So make sure you go and check out this channel and go and watch this video. I'm going to reference during the video I make today a number of things that I found from this particular video, because I'm going to be honest, I don't have an economics background, and this stuff absolutely blew my mind into how it all links together with M2, how it all links together with the wider picture of what's going on. Now, what I learned in that video was that at certain times of fear and worry in markets, when recessions are really likely to hit, like they were back in 2007 and into 2008, where we had the global financial crisis, none of those key indicators that were showing market weakness were actually flashing. So, what did I learn with those key indicators? Well, first of all, it's the US dollar, which you can see here on the DXY. Now, as you know, the US dollar is the world's reserve currency. It means that it's probably the last one to go down if everything does go down, which makes it a safe haven for finances. If you are a major bank and the markets start to take a big hit, which countries fail first? Well, the smaller economies, smaller, weaker currencies. And this tends to mean that everyone starts to move their money into the dollar because they know that the dollar won't go under. This would mean then, if the market was about to collapse and the banks genuinely thought that it was, that the dollar would be spiking towards the upside like crazy. But if you can see on Monday, it didn't really move at all. sat around 102, and right now it's under 100, telling us that this is going to get worse. And this is further confirmed today. The euro is up 1.25% against the US dollar. This is telling us that the economy isn't screwed at all, and the banks out there aren't doing anything that would indicate that they believe that a recession is coming. In fact, they're doing things that make you believe that a recession isn't coming and that the market is actually much stronger than many people are letting on. Another thing these Crypto Unplugged guys taught me is that when we see market crashes, various banks, investors out there will be speculating on the fact that manufacturing and production will go down, which is very closely linked to the copper price, because copper is involved in a lot of different manufacture, from electricals to cars, etc. So, as you can see, this did take a hit, unsurprisingly, because of, fears over tariffs, fears over production. But as you can see, since the other day, it's now bouncing back very strongly. If we were heading towards recession and major fears happening, then you would have expected this to completely fall off the face of a cliff like this, but it just didn't do that. And the list goes on as to various different indicators they were talking about, banks, etc., seeking safe havens for their money. Okay, this is ultimately what it's all about. You can see this happening behind the scenes. If there are real fears in there, the banks, who have huge access to massive data, who have huge access to all these sort of different AI models and models that you and I can only ever dream of owning, weren't doing anything that indicated that they were in anything other than maybe a little bit of discomfort. You can see here the US government bonds, the 2-year yields, which is basically an indicator to tell you whether we're likely to see interest rates going up or down. And this you would have expected to go soaring up here if we were heading towards a recession, because banks would have taken their money and they would have shoved it in here for an easy, low yield but safe return on their money. I hope I've done these guys justice into some of the things I've explained and the takeaways I've had from this video, but I think it should give you an indication of what's been going on, okay? Basically, no real fear happening behind the markets, just fear happening on your TV screen and your Twitter feed. Okay, so that's something that we should be paying attention to, because as these markets continue on, and the more we want to learn about what's happening underneath, the better, because we're not going to be as easily manipulated by the drama that goes on over the tops, because that's how we get caught at the top of the bull market, and that's how we sell off at the bottom of the markets in fear. If the markets right now aren't really that bad at all, and in fact that we can expect them to be stronger than we think, why is the Bitcoin price still stuck in and around here? What on earth is it going to take for us to get out of this particular point? Well, obviously that news has had a pretty brutal effect. This price action that we've seen happening from basically mid-December has also had a pretty big impact on you, on me, on everyone, right? It's caused fear and worry across the markets. Now, in order for that sentiment to change from max fear, which is where we're sat pretty much right now, into a more positive time, we need to see some things happen. What do we need to see? Well, we need to see the price starting to increase. And as you know, the price is controlled by market makers and a few other things. The price moves and then the news is on top to cover it up. So what we're going to need to see for this to have a major move like this, which is of course in the running right now, is we need to see a sentiment switch. And this will be driven not only by price action, but it will also be driven by some form of a news event. What possible news right now could possibly swing this in our favor? I hear you cry. Well, I think it's a few things. Possibly stuff to do with tariffs, but more than likely it's to do with the Federal Reserve and interest rates. Why? Well, because, as we know, Donald Trump has been trying to manipulate the Fed into weakening interest rates. He wants lower interest rates because it will create a risk-off environment that will allow him to grow his economy and make him look like a legendary president. It's also part of his bigger picture, part of what he's trying to achieve with some of these tariffs that he's been putting in over the last few weeks. So are we ever likely to see interest rate cuts come in? Well, it's by understanding this particular chart that I showed you at the beginning of this video. Now, this is the overnight reverse repurchase agreement, the repo. And effectively, what this is showing us is very, very telling. Now, you probably have started to watch lots of videos and understand terms like quantitative easing and quantitative tightening and interest rate cuts and things like that. And it's all linked to the US Federal Reserve, basically the US bank. Now, throughout periods of stress and worry, we've seen in crypto markets, when the crypto market's going down like this, like it did back here, we saw things like interest rates going up, we saw lots of bad news happening. This is because we go through a few-year cycle of quantitative easing and tightening. And you're probably thinking to yourself, yeah, but how has the market been pumping ever since the 4th of January 2023, which is all the way back here, all the way up here, during a period of time where we've seen interest rates at sky-high levels of around 4.5%, and we've also seen on top of that quantitative tightening. Well, because actually, secretly, under the radar, the Fed has actually been easing the economy, and I'm going to show you how. Now, when the market starts to become fearful, when they start to anticipate interest rates coming in, what do the banks do? Well, we already talked about this. They start to put their money into safe havens, places where they're not necessarily going to make a killing, but they're going to make a safe 5 or 6%. One of the best places to do this is in the US Federal Reserve Bank, or the repo market. And basically what they can do is they can chuck their money in there overnight, they can earn 5% on it, and then take it out whenever they want. And after COVID, back in 2020, the banks had, guess what, a load of money, a shitload of cash. What do they do with their money? They started to pay it into the repo market once they started to anticipate that the markets might be getting a little bit too hot. They started to think that it might be getting a little bit frothy. And this, you can see, happened in 2021. And it continued all the way until the 3rd of January, 2023. That's interesting, right? Because at this point, it hit $2.55 trillion. Notice it starts to fall down from there. And that's the exact date, pretty much, the Bitcoin price starts to go up. So what is this telling us? It's telling us this. When the markets are getting fearful, or potentially getting fearful, banks will take their money and they will start to put it into safe havens, anticipating a rainy day to come. As soon as those rainy days are over, the banks will start to take their money back from the Federal Reserve and inject it back into the system once more. This is effectively the same as quantitative easing, but because the banks are the ones that are doing it, it's completely passive for the Federal Reserve. The Federal Reserve doesn't control this. The Federal Reserve just allows it to happen, which means silently behind the scenes, the US Federal Reserve has added nearly $2.4 trillion to their economy since the start of January the 3rd, 2023. This is what's driven the Bitcoin and crypto markets up until now. And you're thinking to yourself, okay, that's pretty cool. So we don't necessarily need quantitative tightening, or we don't necessarily need interest rate cuts. But remember, this is the quiet benefit that's been happening to the markets. We need to break the fear and worry that's in the markets right now. And how do we do it? With something noisy, something loud, and that's going to be rate cuts or quantitative easing. How do we know that they're coming sooner rather than you think? Well, this has gone from $2.5 trillion a few years ago to now just being sat at $129 billion. And just the other day, it was sat at $402 billion. Once this hits zero, guess what? The Fed can't inject any more money quietly or organically or whatever you want to call it behind the scenes. Instead, they're going to have to go loud. They're going to have to continue to push more money into the economy, okay, because they can't afford to not do this. And then guess what? This is where their only next move is none other than cutting interest rates or going public and saying that they're going to start to reduce QT and put in QE. Okay, QE means they're going to start to add to their balance sheet. This is just injecting liquidity. Effectively, this is the money printer meme that everyone keeps talking about with Federal Reserve pushing money into the economy. Okay, this is my understanding of what's happened from the education and content that I've read from these guys on YouTube, on Twitter, etc. And hopefully I've got it done correctly. Okay, guys, if you're watching, feel free to leave some feedback down below. So this is a lot of research that I've been doing from guys like this and others out there. Obviously, it's not completely 100% accurate. Maybe I've made some mistakes. If you're an economics major and I've made a mistake, feel free to let me know what I got wrong down below. But it's interesting, right? This right now is basically going from a quiet period of time that drove the crypto and bull market into a loud period of time that's going to drive the crypto bull market. Well, as we look across the M2 money supply, things are looking pretty positive. We also know that China has just started to stimulate its economy. China has already said that they're okay to weaken their CNY to a certain level. What that means for us is that they're prepared to continue printing more and more money, and they want to do that right now because the tariffs are high. What they can do is reduce the cost of imports by reducing the cost of their own currency. This means that China, who were responsible pretty much for driving the 2017 bull market, have the money printers on. Everyone else has the money printers on. And guess what? When the US, the last safe haven, turns on their money printers, it's going to give the green light for everyone else to start pushing more and more money into the economy faster than you can ever imagine. And this is all linking quite closely to the global M2. Now, if you've been subscribed to the channel over the last few weeks, I've been banging on about the global M2. And I've been saying, yes, somewhere around here, we are likely to push higher. We haven't yet seen it, but this is still in play. That's because various other M2s are linking up with this particular point in the market. How do we know this? If you add this indicator, which is M2 money shift for Bitcoin, then you can go and change the input styles here. You can go and have all of the different ones here and have the global one, or you can go and do what I recommend and have a few different ones where you can put on EU, you can put on China, you can put on Japan, This is on a 10-week delay. On the weekly chart, you can go and change whichever one you want to be able to line up whichever you think is going on. But I think the 10 weeks is the correct one. This is so useful because you would have been able to predict this peak up here in the kind of markets, okay, back on the 9th of December. This was the China M2 falling off the face of a cliff here and was probably responsible for a bit of this pullback. And as you can see, China M2 starts to surge towards the upside. We do see it going sideways for a bit into mid-May and beyond. There is an indicator here that we could potentially see crypto recovering nicely and then seeing a bit of sideways action into kind of June time, maybe beyond into the summer, before we then see continuation here. But looking across at the various other M2s, this blue line is the EU M2. You can see it chops around all the way down here and eventually it absolutely rips towards the upside somewhere into May. This here is the US M2 and will no doubt coincide pretty nicely with those repo markets if I want to go and put it on to the charts here. And you can see, again, this is climbing up higher and higher all the time. This here is the Japan M2, and again, you can see that this has been ripping up higher and higher. It means that we are pretty much at the bottom. We've seen the bottom in recent times. We are seeing some of the worst news get dropped right now, and yet it hasn't shaken the markets. The underlying economy is strong, and crypto is destined to head higher sooner than you've been told. Which of these individual M2s flows into crypto? All of them. Okay, which of them is impacting the crypto prices on any given day? It's difficult to tell, okay, but we just know that we are pretty much damn close to the bottom round here. Now, guys, if you want to understand a little bit more about what I've just talked about, I'm going to go and make a tweet over on Twitter. Go and give me a follow over there. That would be very much appreciated. Also, right now, pretty happy to say that Ledger has just included Sui as one of the coins available in their wallet. So if you want to go and pick up one of their hardware wallets, this is the Ledger Flex. It's the one I use pretty much every single day and one of the best wallets I've ever used. Then use the link down below in the description. Then you'll be able to get some cash back in Bitcoin for using my link. Also, if you wish to go and buy any crypto coins out there right now, then make sure you use Bitunix and WEEX, both linked down below in the description. They don't require KYC. You can use them anywhere in the world. They have a huge amount of different altcoins available and some of the lowest fees out there. There's also some unique gifts, discounts, and deposit bonuses if you use my links down below, so make sure you sign up through those and don't miss out on the next major moves that are happening in crypto. Hope you enjoyed that. Hit the like button, subscribe, and have a great weekend. See you soon. Bye-bye.